Ready to trade futures? Well, there's never been a better time to get started. But first, some quick history. Futures contracts were initially created as a way for farmers to insure their crops by locking in future selling prices before their harvest, probably why we call them futures. The very first futures exchange can be traced all the way back to the year 1730, making futures a cornerstone of the global financial system. Today, futures reach well beyond farmers insuring their crops and are often traded as speculative products. You'll often see futures referred to as derivatives because they derive their value from the underlying asset they represent. And these derivatives represent an enormous variety of markets, such as stock indexes like the S&P 500, energies like oil and gas, agriculture products such as wheat, cryptocurrencies like Bitcoin, and metals like gold. Making futures even more unique is a big bucket of benefits not seen in some other asset classes like stocks and foreign currencies. Let's have a look. Diversify across multiple asset classes. Trade futures on everything from stock indexes to orange juice and much, much more. Traders gotta trade. Being a trader means being able to quickly and easily trade long or short based on your market outlook. Futures trading allows for this by simply buying or selling contracts. That's futures, and that's a beautiful thing. Oh, and unlike stocks, there's no $25,000 pattern day trading balance requirements, no uptick rule, and no short selling restrictions. Get the right fit. Futures come in a variety of sizes, many specifically designed for the individual trader. These smaller contracts allow you to get started trading with less money, then scale up as you become more comfortable. Use leverage to your advantage. Futures are traded on margin, which is essentially borrowed capital. This boosts your buying power, allowing you to trade larger positions with a smaller outlay of cash. Insure using futures. Traders often use futures contracts as a means of insurance, also known as hedging. Remember, futures started as a way for farmers to insure the crops they owned, but that were not yet harvested. So, let's pretend Bitcoin is a crop you own and you think the price of Bitcoin is going down. Just sell some Bitcoin futures contracts to insure the coin you own. When the coin goes down in price, the futures contracts you sold go up in price. That's the concept of insurance. Trading round the clock. Futures traders are free to seek opportunities nearly 24 hours per day, and in the right situations, this could prove to be a cool thing. For example, let's say a large cap technology stock that's part of the NASDAQ 100 is going to report earnings after the closing bell. While the stock market is closed for trading, futures on the NASDAQ 100 index trade nearly 24 hours a day, providing additional opportunities for futures traders. Futures are regulated and exchange traded. You can feel good knowing that futures are exchange traded and highly regulated. They trade on one exchange at a time, so no hidden liquidity to worry about and no varying prices from exchange to exchange. The price you see is the price everyone sees and gets. That's futures. Ready to get started? It's easier than you think. Start trading futures today. Visit Tradovate.com.